Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba. Thanks for joining me. Tonight, I'm joined by the dapper Thabo Ncalo, portfolio manager at Stanlib Asset Management, for a closer look at market activity in Ghana. Thabo, you always embarrass me on the show, man. You stop looking so good.
As long as we focus on the markets, I guess, you know.
There you go. Okay, let's jump in. Ghana.
Yes.
Let's start with a top-down view of the country. How are things looking in Ghana right now?
Well, good evening, first of all, Tshepo, and good evening to all the viewers. Ghana is interesting. Ghana is always one of those interesting markets. Well, not just because I guess it's, West Africa's sort of black star as we know it, but I think it has a small market, but I think it's a pretty important country in Africa as we know it.
Right.
So from a GDP perspective, if we start just touching on the growth numbers, I mean, much like most of Africa, we've seen those GDP numbers come off. I mean, we saw those numbers being, coming off from, call it 7-8% to about 4%.
Very difficult 2015.
Very difficult 2015, of course. But they're still growing at about 4%.
Right.
And one of the biggest things, if you look at Ghana, about 56% of their exports actually comes from cocoa and gold.
Right.
And both cocoa and gold, gold has held up. Gold has done relatively well compared to other commodities. And the cocoa price has also done quite well. So, as we all know, Ghana also discovered oil on the Jubilee fields. But even the fall in oil price, unlike, for instance, Nigeria, which is heavily reliant on oil, that didn't hit Ghana as much, So 4% is still quite decent, coming through for the year.
Right. In terms of the outlook for that economy, is there a move to diversify away from just commodity-driven?
Yes, definitely. If you look now, the biggest thing has been power.
Right.
So what the country's been trying to do is bring in power. So they brought in a Turkish ship that's docked just outside Apapa and sort of the industrial areas, which is pumping in about 450 megawatts into the power grid.
Right.
Now, that's pretty significant for the economy because then it allows the economy, the manufacturing sector in particular, to be able to thrive and at least grow from where it currently is. It allows general industry and general businesses to function better when there are less power cuts and so forth. So certainly that diversification and the need to diversify is happening, and hopefully we'll see a bit of an acceleration as the power situation also improves.
Wow, that sounds like a definite positive in terms of growth outlook going forward.
And of course, the other big sector has been the tourism sector.
Right.
What's been important, I think it was when Ghana last week, when Ghana celebrated the 59th year celebration in terms of anniversary since independence, the president announced that any African, as long as you're an AU member, you can land in Ghana without a visa and you'll get a visa on arrival.
There you go.
So that's significant because at least, that's something that could potentially boost the tourism sector in Ghana. And as we talk about diversification, we want to see a move also towards, the tourism sector. Ghana has incredible assets in terms of the tourism side.
Right.
The slave monuments and the Cape Castle, Elmina and so forth are quite significant. I think are things that a lot of Africans have to go and see.
Very rich history. Okay, let's drill down to the focus area, the market. Sure. What are the big drivers in terms of the stock market?
So a pretty interesting stock market. You've got about 35 companies listed on the market. It's about a $14-15 billion market cap, depending on when you measure it, of course, with the currency. But it's a bit of a vibrant market, although I guess we still struggle with liquidity.
Naturally.
So I guess it's the same story outside the bigger names, So liquidity is an issue, but it's an interesting market because you get some diversity. You've got, for instance, consumer companies, banks. You even have a healthcare company,
Right.
So which is quite interesting. It adds a bit of flavor, I guess, to what we typically see around the continent. Yeah.
Okay. Let's touch on some of those companies. Anything that interests you right now?
There are quite a few. The one company that's come out now is FEN Milk.
Right.
And FEN Milk put out results just a couple of weeks ago. Now, FEN Milk is an interesting play. FEN Milk is a dairy, yogurt, and ice cream sort of manufacturer.
Right.
Now, that business has just been bought over by Danone.
Right.
The big global Danone we know. So I guess this also shows you that there are still investors who are really positive about Africa and putting capital to work. So FEN Milk is owned by Danone and private equity firm Abraj.
Right.
So it's listed on the Ghanaian market, and of course FEN Milk operates across 7 countries in West Africa, in markets like Nigeria, Togo, Benin, Burkina Faso, and so forth. So
a big population to tap into.
Huge population to tap into, of course. And results that came out recently were quite good.
Right.
We saw about 78% 100%, increase in top line, which is absolutely incredible.
Right. Especially given the down patch in the economy.
Correct, yeah, which has been fascinating. I mean, a lot of this has been fueled by a couple of things. The government has injected some support, for instance, for cocoa farmers, which is now trickling down into the economy. And we're seeing some of these consumer names like FEN Milk and some of the breweries starting to benefit from this fiscal injection and stimulation. Yeah.
Right. With Danone coming on board, are we seeing a lot of Danone's traditional products being rolled out into that?
So yeah, Danone has announced that I think from the second half or so of this year, they'll start introducing some of their brands. As you can imagine, after you make the acquisition, it still takes a bit of time to introduce products and of course merge them into the current basket. So they own 51% of the business of FEN Milk International, and of course we will see a lot more Danone product being pushed through these 7 markets, and particularly in Ghana.
And where is their big market? Is it specifically in Ghana, or are they actually quite big across the region?
I mean, Ghana is a key market for them. I did a trip, just anecdotally, I did a trip from Nigeria to Ghana driving through, Benin and Togo, which is an incredible trick I think every African should do.
You're making me very jealous right now.
But what's interesting is that when you do that route between Nigeria and Ghana, you see a lot of the FEN Milk trucks,
Right.
and you see the move coming up and down. So it's certainly a market. I mean, Nigeria is obviously the biggest market from a population perspective, but the company is able to move its product across the 7 markets that are all linked,
Right.
And I think that expands the market just over and above what we see in Ghana and the population of Ghana.
Right. So the scope for long-term growth, it sounds pretty good.
I mean, I think if you see, I mean, as I mentioned, Abraj Private Equity bought into it. Danone has just made an acquisition of 51%. So I think they're seeing clearly something that we should all also recognize, that they see massive growth, and they've backed they put the money where the mouth is.
Underlying profitability, good?
I mean, the profitability is very good. When we actually saw a good jump in EPS as well this year, and I think that's what we want to see. One of the biggest challenges in Ghana has been the operating expense environment, as it were.
Right.
So because of this power increase in power supply and so forth, we've seen tariffs are rising quite sharply, in the region of 60% and above,
Right.
We've seen water tariffs rise up quite a lot. So all of these things are adding to the OPEX, and I think that's the only risk, the key risk with a company like FEN Milk, and perhaps with all the other companies in Ghana. The biggest risk is, the inflationary risk, I think that comes across. But we've seen nice price increases that FEN Milk has been able to get.
Now, putting that all together, this sounds like you're positive on this company.
Definitely. Positive on the company, I think positive on the consumer. Look, we're cautious. Obviously, there's an election coming up, so you can expect some disruption in policy and so forth. But I think we're a lot more positive, especially if you look at what's happening across the region, in Nigeria and so forth, where there are a lot more headwinds than we're seeing in Ghana.
Right. Moving elsewhere in the market, anything else?
The banks are interesting.
Right.
I mean, obviously, we all touch on the banks. I think the banks make a very good case, I think, for investment.
Banking penetration in Ghana?
Banking penetration is still pretty low. I think it's still around the sort of the West African levels, where actually people are, even if you look at the figures, you have some people who have multiple accounts. So you actually have a little overstatement of the figures. So I think Ghana, the banking penetration can still go on quite a lot, and I think the opportunities, particularly for banks like Ghana Commercial Bank, which have the widest sort of branch network in the country, they stand to benefit quite well as they start to penetrate traditionally unserved markets. And it's all about innovation after all. I think what we want to see is banks and financial institutions that can come and offer products that actually get to people, as opposed to expecting people to just walk into the branch.
Stuff like mobile banking.
Mobile banking and so forth, yes. So I mean, technology, I think, in general, apps and so forth, and fintech as a broader sector, I think we want to see popping up in Africa, and particularly in Ghana.
You touched on Ghana Commercial Bank. What do the balance sheets look like in terms of the banking sector, and that in particular? So
if you look at, across the banks, you've got banks like Standard Chartered, you've got EcoBank, which is obviously part of the ETI, the larger ETI stable. Yep. You've got Société Générale, part of the French Société Générale, and across the bank, across the sector, you find a lot of the banks parking their money in government securities. Right. Interest rates are very, very high in Ghana, yep. And you find a large chunk of the balance sheet across the sector sitting in these high yield, I guess, T-bills and government securities. And the government of Ghana has obviously been also coming out and issuing paper. They just issued about 500 million cedi of paper out, about $125 million. So a lot of the banks are parking their money in a lot of these T-bills and so forth. As you can imagine, getting a car loan is in the region of 20% and above, for most professionals.
Right.
So it is quite expensive for the banks, but we've seen the guys grow their loan books. But of course, a large chunk of it still rests in government securities and so forth.
So the underlying return on equity, does that look quite healthy?
Yeah, I mean, some of the banks, for instance, Standard Chartered came out now with a pretty low return on equity. I think it was even shocking for the full year because of the impairments they wrote off. So they came out with, I think, about 12-13%,
right.
Which is very low. I mean, it's way below even the cost of equity we put out on the Ghanaian market. So some of the banks, I think, are doing quite well. A bank like EcoBank will have slightly higher return on equities. A bank like for instance, a Ghana Commercial Bank has been improving quite well. So I mean, it's across the sector, and I think you have to pick where I guess you are covered, at least from a cost of equity perspective. Yeah.
All right, perfect. Sounds pretty good. Let's leave it there.
Thanks.
Thanks to my guest, Thabo Ncalo, Portfolio Manager at Stanlib Asset Management. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepo. And send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, goodbye.